guys, this is a red alert. Look, we've posted a huge long video, about an hour long, on Sunday, the 26th of January, pointing to how the market was going to crash today. Now, in the last couple of videos, we're getting the follow-up, but I do have a bunch of traders asking me, hey, Leonardo, how should we trade this market going into Thursday and Friday? So I'm recording this after hours on January the 29th. Yes, exactly 2 years after the market phenomenally crashed in January of 2018. Now, most of the traders don't remember that crash, but it is coincidentally that there was one thing that was pointed in that long video that I wanted to make sure everybody remembered, and I'm going to show you exactly what I'm talking about here in just a second. Now, this is a serious alert, guys. We're expecting Dow Jones to drop anywhere from 800 to 1,200 points. Yes, specifically tomorrow, January 30th and January 31st. So it could easily drop 500-600 points tomorrow. It could easily drop another 500-600 points, guys, on Friday, which is awesome conditions for shorting this type of market. Please understand that there is going to be some intraday bounces, just like there were some intraday bounces that we've indicated in the prior video we've posted earlier. Now, for the purpose to keep this video brief, I only got 8 charts that are going to show you exactly what has transpired since we posted the last video to keep you guys updated on the upcoming crash. And yes, we did get the Tesla temporary move wrong, but it does not mean that Tesla will not sell off tomorrow. But the fact that Tesla is actually climbing high, guys, this is exactly the sign why this market is about to crash. Throughout the history of all the crashes in the last couple of years, okay, Tesla has been the type of stock that's been unable to drop. So as I was watching my screen and Tesla jumping higher after hours, I'm like, look, this is just another sign that the market is just about to drop. So here's it is, guys. Here are the details. 9 move. That's exactly what predicted in the video we posted earlier this morning. 9 move, guys. It's a shift in the market direction. After something goes substantially high for quite some time and that direction is about to shift, that's what that move 9 in the 13 market moves formula is designed to actually indicate, and it typically coincides on the day of the Federal Reserve type decision. And because we've been doing this for so long, that's exactly how we were able to nail this move. So if you haven't watched the video this morning, we basically said, hey, this is a phenomenal opportunity to short the market between this level of 32.90 and 32.95. It's not going to go over the 3001 level, which exactly where the market topped today was about 32.92, was adjusted to short the market, saying, hey, this reversal about to materialize. It was said at 2 p.m. the market was going to pop on the Federal Reserve announcement. It was going to drop. It was going to pop it again, and it was going to drop. Now, this is just a brief understanding for you guys of what market move 9 is. Now, what you should know is it's not just about the market move 9, but the overall sequence, okay? And the most important thing to understand here is on every Thursday, we're beginning to see a huge shift. So from getting these 7s on pretty much every Thursday in January, we shifted to first a move 4, where VIX for the first Thursday was rising. Now, on this particular occasion, tomorrow on Thursday, we're no longer even going to get green move. We're tracking for a red move, move 3 or 11. 3 move starts out with a gap lower. So that basically indicates that there's a great probability when you have this reversal on move 9 formation at the Federal Reserve announcement of important decisions. A major shift in the market typically happens right after Wednesdays. And in this particular case, a lot of time the next sequence is going to be 3, 11, 3. So it's going to be a variation. But in this particular case, considering how well VIX has held up today, I want you to pay attention to this first very important observation of the day. So basically understand, as far as the move's concerned, okay, even if you don't know the formula, this is the takeaway from here is understand that a move 9 is a shift in market direction. And sometimes the shifts, they come rather rapidly. So this is why this 1,200 point move lower in the next 48 hours in the Dow, it ain't nothing. Okay, 130 points lower in the S&P, guys. Hey, this may be a very conservative estimate. So, guys, this is a phenomenal opportunity. I don't want anybody to miss it. So, here's what we are seeing as far as what actually took place today. Major divergence, guys. Compare January 15th on this chart with January 29th. S&P versus VIX. So here's the chart of S&P 500. This dot right here corresponds to the 15th of January. Look at what level S&P 500 was trading. Right around here. Look at today after the close. Okay, right around here. These are the same levels. These are the same levels on this chart, guys. Okay, however, notice what happens to the level of the VIX. So while S&P 500 basically right here works its way higher right before it sets the stop right here, then today it tries to climb against that gap down that was created. So when we're looking at this level, it's identical. However, if we examine the VIX levels, they're not identical at all. So now compare this basically on the 15th of January, VIX was trading just around 12. Since then, look, VIX has closed in the 16 handle, above 16, which is a critical number in our 13 market smooth formula, guys. So look at this. VIX jumps while the market is staying at the same level. Okay, so VIX was supposed to go lower. If we're staying at the same level, last time we were at this dot, we were at 12, actually dipped slightly, briefly under 12, like in the 11 handle. Now this time around we're here, VIX is above 16, and was just recently at 19, so this does not match. Okay, this is not the same type of market where we were 2 weeks ago. So this divergence right here, guys, is a solid indication that a big reversal is about to take place. So as pointed out in the last couple of videos, VIX can easily break out above 20, possibly even 25 level, literally in the next 48 hours. Now, the one very important point I promised I was going to reveal to you that most of the people probably weren't paying attention to that 1 hour long video on Sunday is this. One crucial aspect that I pointed out from the historic analog dating back to January 29, 2018. It was this very fact right here that I pointed to, that the markets in Hong Kong set the top and began crashing the day before United States market began to crash. That is exactly what nobody was talking about today. Everybody was talking about the Federal Reserve and the earnings and all that stuff. Nobody has actually talked about this huge gap down in HSI or Hong Kong. So now that this was created, if we track the historic analog, it points to a big move lower here in United States market tomorrow on January the 30th. So expect a big gap down. In Hong Kong, the gap down 700-800 points. So this could be the size of the gap here in the United States tomorrow. But even if it's not this type size of the gap right away, like in other words, if we open like 300 points lower in Dow Jones, like don't be fooled that all of a sudden they're going to come and buy the dip. Because by the end of the day, we could easily be down by 500 to 800 points. And that is not going to stop. So your ideal entry point is short the bounces on this, guys. For those of you that took action yesterday, today, hey guys, congratulations. You're about to bank. You're about to bank big on this crash. Now, I promise to keep this video brief, guys, so here it is. Apple, today, is pointed out multiple profitable trading opportunities. It could not take that level that was specified in the morning video, 327, 328. Guess what? Black reversal candle. Institutions were taking out money out of Apple on strong volume. Now, for those of you that just look at the price action and you buy stuff when you see stuff goes higher, guys, you're going to be caught off with a big surprise tomorrow. Apple is going lower, as pointed out in the morning video. Goldman Sachs, this is one stock that we were watching like hawks today. With one agenda is to understand whether the financials are going to reverse lower from here. And there's every indication. I didn't insert the chart of Bank of America, JP Morgan. There's a bunch of charts in the financial sector that point to a reversal lower from here. Goldman Sachs had an investment analyst meeting today, and instead of moving higher, as hard as it was trying to convince the analysts how rosy the picture looks ahead, analysts didn't take it like that. They said, hell no, we're selling. So if you jumped on the spot, guys, that was an easy 500%er today on this move from 247. At one point, the stock was trading under 240. Now, that's not everything. The bigger drop is very much here in the making. But the point is, and this last two pictures I'm trying to show you, this was a black bear reversal candle. This one right here is a red bear reversal candle. Okay, the colors of the candles are different, but they indicate the same type of action. Institutions are taking money out of these stocks. And a very interesting thing happens to Facebook. Everybody expected some really great stuff out of Facebook earnings, and it just didn't play out the way it was. Well, here's the divergence on the RSI. Here's RSI right here. Here's RSI goes lower, while the stock actually goes higher on strong volume and picks on accumulation distribution right here. So we all know what happened to Facebook after hours. It drops. Now, when we combine this Facebook reversal with a reversal in Apple intraday, this really tells us, hold on, the tech sector is not going to move higher. The path of least resistance at this point is going to be lower. And the crazy thing happens after hours with Tesla. Yeah, we said it could have dropped $90 to $150. The stock defies all laws of gravity and it rockets higher. Now, the interesting thing is you can see I've got this chart right here. Tesla rockets higher while Facebook is doing exactly the opposite. This is a divergence, okay? There is a shift in direction here, okay? Quality stocks like Facebook have been going along with the market, really doing exactly what the S&P 500 has been doing for some time. Now, that's been the history of Facebook for, the last 5-6 years. Now, we can't say that that's been the history of Tesla. And if you study all the recent history of drops where the market dropped 600, 700, 800 points on certain days, Tesla is not the kind of stock that actually drops on heavy distribution days in the market. So when we see this behavior, this is actually the last actual sign that points to the fact, okay, that Tesla is not like Amazon. It's a negative beta stocks. In other words, when market goes higher, Tesla can easily drop. When market drops, Tesla does not drop by as much, or it can actually go higher. Okay, so looking at this divergence between Facebook and Tesla, okay, this is actually divergence point to a fact that the market will go indeed lower tomorrow. So with that said, guys, okay, yes, Tesla at some point tomorrow will drop, will make a pullback, so target a great entry on the bounce, okay? But this is not going to be your top short opportunity for tomorrow. There's tons of key plays out there, which we've covered in the last videos, guys. But a lot of stocks are going to be making reversals tomorrow. A lot of stocks announced earnings after hours. Hey, guys, ton of money-making opportunity with stocks like ALGN, LRCX, guys. The list goes on, so get ready. Okay, stay focused tomorrow. Take advantage of these crazy markets. It's going to be high volatility time. It's time to make some money. Trading weekly options. Let's roll. I wish everybody awesome trading in the next 48 hours.